Hello everyone and welcome to our next technical analysis review for the Euro US dollar pair. Today is February 11th, 2014 and we are currently looking at our 15-minute chart for the Euro US dollar pair. You can see this yellow vertical line right here is dividing yesterday's trading session from today's trading session. And for today, as you can see, we've been pretty held within a tight range. Of course, you can see that the Euro US dollar pair engaged in some whipsaw choppy behavior, especially prior to Janet Yellen's testimony before Congress earlier today. But you can see how we was really within a tight range of only 54 pips from the high up here at about 36.83 down to the low for today here at support around the 36.29 low right here. So then of course we can see that the Euro US dollar pair has traded sort of within a 54 pip range, and for today we're currently negative for this part of the trading session. We're right below where we opened for today, and right now we're in a period of consolidation right above this Fibonacci retracement level and also our low for today going into the close. But of course, like I said before, the major event that influenced market prices in a variety of asset classes today was Fed Chairwoman Janet Yellen's testimony before the House earlier on today. And of course, some investors were sitting on the sideline for this week. They wanted to sit and wait to hear if there would be any clues in her speech regarding, her, of course, forward guidance in the tapering process and guidance on the future course of interest rates. So then, of course, many investors were trying to wait for clues concerning the Fed's monetary policy, since she is now the new and current head of the Federal Reserve. So then, of course, during her testimony or speech, she did make some clarification. She mentioned that the tapering path of 10 billion per month was not something that was set in stone. It's not definite, but it will be primarily contingent upon future economic data. As we get more data, especially in the areas of unemployment and inflation, that would determine whether or not they would maintain their taper of 10 billion per month. And we'll see, of course, if this process ends by the end of 2014. So then, of course, for her, she was still dovish in her statement. They still plan to maintain low interest rates even when we reach our targets for unemployment, and even beyond our targets for unemployment and inflation. But of course, although her statement was pretty accommodative, like most analysts expected, it didn't really provide too much directionality for the Euro US dollar pair. And you can see how we're still locked within this mode, and we only traded within a 54 pip range for today. So then we're neither bearish or bullish on the longer term. We're still bullish, and you can see that if we draw in a trend line, you can see that from our low here, you can see that we were bullish for most of the past few trading sessions. So then we may be in a period of consolidation, and this could be forming a topping pattern to lead into more dollar strength, or we could just be in a range in consolidation preparing for the Euro US dollar pair to trade higher, but only time will tell. But one thing I wanted to point out is this important zone of resistance here around the 36.80 zone here that has served as resistance a few times. And you can see how price has failed to make its way up and break above these levels. You can see how there was multiple attempts to break this 36.80 zone, but it failed to break it. And of course, there's reasons for it. We can see here that this is historic resistance. This is the common area of resistance. But if we go to our higher time frames, we can see a little bit more. If we glance across, you can see how in late January this served as resistance. But not only that, this is also our Fibonacci retracement level, our 50% Fibonacci retracement level, this blue cyan dashed line here. And if we go to our 4-hour chart, you can see that this is the Fibonacci retracement level from that major move down, from the high here in late December at 38.94 down to our lows here around 34.77, and that created this 50% Fibonacci retracement level around the 36.80 zone. But this is not only that, this is also where our monthly R1 level is from our monthly pivot point calculation. So we can see that this is serving as an area of confluence on our chart. Let me go down to the 1 hour. Okay, this is serving as confluence. Let me just go back to our 15-minute chart. So then, with that being said, seeing that this is historic resistance, and since there is signs of confluence, we have our Fibonacci retracement level, we have this monthly R1 level, and of course this trend line. But if you wanted to, even though the mode was still bullish or the sentiment was still bullish, you could have entered a trade and placed a trade to play this particular range or play this support at this level. And what you could have done, you could of course entered to go short upon the break of this ascending trend line support. And if I draw in, okay, let's say, okay, I make this, let me make this solid, okay, or thicker, and let me add in another line. Even though we have a bunch of resistance lines there already, I wanted to show you that in some way this could have been sort of like an ascending triangle. As you can see right here, you can see our static horizontal support here, but you can see our ascending trend line support being formed here. So this was a form of consolidation. So what you could have done, you could have traded the breakout of this triangle or this ascending triangle. You could have actually entered the pair upon the break of this ascending trend line support at around, let me see, probably like down here around 36.63. You could have placed your stop loss on the other side of this resistance up here around 36, let's say 36.85 or 85 or 84, depending on what you want to do. I would say 36.85. You could have placed your stop loss there. And you could have, of course, held on to this position and taken your profit when price reached these levels here around the 36 zone, where this 38.6% Fibonacci retracement level is. And you could have cut your trade off here and took profit here at this support for about a 27 pip trade. So then you could have entered here around 36.63 and took your profit when it reached 36 for about a 27 pip trade. So then that would have been trading and playing off of this range here. But as you can see, that was prior to Janet Yellen's testimony and speech. And if I was looking for another opportunity to enter the market, I would not have done it during her speech, but I would have waited till, at least, towards the end or after her statement before the House on today. So then, of course, you can see how price did make its way back up and make an attempt to test this 36.80 zone again. But of course, price still failed to break above those levels. So then what I would have done, I would have looked for an opportunity to short this. But instead of shorting too soon, especially during her testimony, I would have at least waited for some type of pullback. I would have waited for price to move lower and actually traded upon the pullback or pull up to this 100 simple moving average line right here. You can see this purple line right here is our 100 simple moving average line, and I would have waited for a pullback up to there, placed my short, around 36.54, around a test of this 100 simple moving average line, and 36.54 upon confirmation, and probably would have held this trade out until it reached this support here around 36.36. For about, it's almost a 20 pip trade, maybe a little bit less than 20 pips, but I would have held out my position here. And you can see right now that price is consolidating at these levels right now. So then this would have been a good opportunity to enter and just, you could have closed your trade out here or could have held on and see if it breaks below these lows. But of course, with that being said, if price does decide to continue lower, if it breaks past this level here and decides to break past the low for today, we can expect price to reach and find support at this 3600 psychological level right here. So then that's what we can expect. Now, if price breaks below this level, then we can expect a test of our monthly pivot right here around the 3683 or 3583 zone. Sorry. This is our monthly pivot point level at 3584. So then once price breaks through here, we can expect a test around the 3580 zone. Oops, excuse me. Didn't mean to do that. 3580 zone or 3584. So then that's if price breaks to the downside. Now let's say price during the Asian trading session wants to pop up and there's news or headlines that support prices breaking above this area of strong resistance up here. Then if price does break and close above this area, what we can expect a test of the 3700 psychological resistance up here. And if price breaks upon this level, we can expect certain stops to be triggered and for momentum to carry price up to our January 27th high. I know you can't see it on the 15-minute chart, but if I move to, let's say, let me see if we can probably pull it up on our 3-hour chart. If I move to the 3-hour chart, you can see if you look to the left, you can see this is our January 27th high around 37.17. We can expect that to be resistance. And of course, if price breaks above that level, then we can expect it to test this 61.8% Fibonacci retracement level of that major leg down from on our daily chart, from the highs of last year down to the low for this year. So then that would be around this area of 37.34, 37.35. So then, of course, that's what you can expect. Those are certain levels that you can expect it to hit depending on which direction is being favored, whether US dollar strength is being favored or whether US dollar weakness will continue and the pair will move higher. But that's it for my technical analysis review for today, and I will be talking to you guys later. You guys have a blessed remainder of your day. Talk to you soon. Okay then, bye.